2025 tax prep. So, all right, I think I got my screen up there. The time is here, right? 2025 is in the past, 2026 is here. January is over. We're like full speed into tax season and we're ready to do some tax returns. So from the basics, covered at just kind of like a high level, we got to dial in your income, right? If you're a W-2 employee, you should have those W-2s from your employers. If you're a business owner, you should be getting K-1s. If you're self-employed, you should have 1099s. 1099s also come from investment statements. So if you have interest income or investment income from your stock portfolio and all that kind of stuff, all of those documents should be close to being in your mailbox or your inbox by now. If not, sometime soon they should be coming. If you're the owner of an S corporation, you want to make sure we got that owner's compensation dialed in from 2025 is very, very important. This is another one too. This is new for this year. If you're a business owner or if you are employed and receive tips or overtime, you want to check it for payroll accuracy. You know, the US government, when they make these big changes or when the IRS makes these big changes, sometimes everyone out there is not 100% ready for it. So we're already getting a lot of questions on, hey, I got my W-2 and I thought, there was going to be no tax on tips, no tax on overtime, and that stuff isn't 100% reported right. So that is one thing. If you're a business owner and you employ people who get paid on tips or get paid overtime, you want to double check with your payroll company that stuff was categorized correctly. Or if you receive those as forms of income, we want to double check that too. So, and before I keep going too, I see a couple more people popped in. If you got questions, pop them in the Q&A box. We'll make sure we answer all of those before we get done here, or you can hold them to the end and we'll be able to ask Lonnie and ask Dustin as many questions as we want to. So for expenses, we got to dial that stuff in. If you're a business owner, make sure we have the breakdown between the personal and the business separation. If you are commingling those expenses, we need to make sure by the end of the year, we've got everything reconciled and separated and extremely clean going forward before we go for taxes. You want to make sure you really dial in your vehicle, your meals, and travel deductions. If you own a business, we're going to ask you for that business P&L and balance sheet. So that's if you use QuickBooks or some other sort of accounting software, it should have all that stuff nice and organized for you. That's our favorite. If you don't, that's okay too. We just ask some sort of organized spreadsheet, or we have our business expense form that a lot of you are probably pretty familiar with on our website too. We ask you no shoebox accounting. Don't bring us that big box of receipts or that big unorganized pile of paper, because that's no fun for anybody. If you got rental properties and you manage that stuff yourself and you manage all the income and expenses, you can put it together. If you have a property manager, then more than likely they're going to send you a 1099 and then some sort of reconciled statement with all of the categorization of all the expenses on the property at the end of the year. This is a big one because they made some big changes here. So your 1098 form, that shows your mortgage interest and real estate taxes that you paid for the year. One of the big changes from the One Big Beautiful Bill Act last year was they changed it. Prior to there, the amount of real estate taxes you could write off in 1 year was capped at $10,000. They actually changed that and put it up to $40,000. So I say all that to say this 1098 form, it was always important, but it didn't make a difference for a lot of people because of that cap prior. Now, if your real estate taxes are higher, this could make a major difference for you on the itemized deduction section. Then of course, if you had any major life changes, we need to know about that stuff. So if you got married or you got unmarried in 2025, if you had an extra dependent or you're not responsible for a dependent anymore, we need to know about that stuff. As proactive